Okay, so for the AVID market update, we're going to talk at first about just the overall climate. There's this Pioneer Title Index thing, and it doesn't mean anything to us, but the number is 162, and it's low. And that's like a measure of the vibrancy of the market and what they see going on. They take 9 factors that are all indicators and put a score to it. So these are the number crunchers. And they've said with January in the books, the Treasure Valley real estate market has yet to show signs of an upswing in activity. Nowhere is this more evident than this score, which is a 6-year low. This number is at a 6-year low. I was surprised to see that. For those of you on Zoom, we did put the presentation in the chat box. Leslie did. And that way, because I know these slides can be really hard to see. And that way you can to see it there. But this is that Pioneer Price Index over time. And you can see that it's lower than it's been. And so up at the top there would probably be our spring 22 when we had a peak. Did you do a?
No, I was rubbing my head. Sorry.
He wasn't fixing his hair for those of you on Zoom. I'll just give you that. The existing home sales, this is what this looks like. ADA is the blue line on top and Canyon's the purple line. And you can see that the number of sales has been decreasing. The building permits had some big spikes in there. And the first month, this is January 21 and to present is what we're looking at from a time stamp. But here is 2012 to present. So it gives you a really good picture of what we've been seeing over time with building permits. Is that too fast? Let me know. I'll sit on this one, which has a lot of data in it. It shows you the 22 starting in November and going to January. Shows you what's been going on with building permits. They've gone down. New home sales have gone up. Existing sales have gone down. And refinance business is really low, as I'm sure you can imagine. That there was a big, long window for refinancing. That was the time to do it, if you could. And what's really interesting is you'll see our average price of homes has gone down a lot. And days on market is up. Dave.
Stacy, for rentals, I see these as homes.
Yes.
In Garden City, our home is kind of up on the fence there. We looked out and there's giant apartment buildings being built here.
Mm-hmm.
All over town are apartment buildings. So do any of these slides reflect the number of apartments available?
Oh, right. In terms of the building permits. No, the Ada County assessors are coming in April, and they will really be able to delve in a little bit deeper on building permit starts, number of units coming online. Some of the things I've seen in the local economic forums have said things like it takes a lot of units to really push the vacancy higher. And so if they are building a lot where it's such a deficit in this market for housing units, in theory, we can absorb a lot without a huge impact to vacancy. And it would take a lot to bump it 0.5% or 1%. But I haven't heard anyone talking about these big apartments bumping it more than that. Now, if they all come online at once, that definitely, as they're filling, if they have to give incentives, that could shake things up.
Well, driving around, it just seems like there's construction all over the place.
I agree. And, there's the number crunchers and there's qualitative data. And, it's hard to look at all these huge units coming online and not think, well, that's going to shake something up. Yeah. Doug, did you have anything you wanted to add on that?
I'm just saying, I'm starting to see some pressure on lower rents just from, tenants filling up apartments. And so you see that on the front end by move outs, and they just can't afford the rent basically at the current market price. So we've lowered rents, to bring tenants back in. And I've just been telling owners that it's better to go lower now and get the tenant in for a year, what's coming to keep the cash flow rather than trying to, lose a couple of months in delay and every month that it's not rented, it costs you a lot of money.
So that's to refill somebody that moves out. What about for existing tenants? can lower the rent for them ever, or?
Yeah, when they give us notice, say, hey, we're moving out, can't afford it, we try to renegotiate with them right there.
Okay.
We just try to say, hey, what would it take you guys to stay, and what's your reason for what? I mean, obviously, there's some instances you can't, but we try to keep them there. But it saves turnover costs for the owner. And it's a win-win if it works out. And so we're probably about 30% efficient, effective on renegotiating.
So here's a look on the average price, 2012 to present, average price of homes in Ada and Canyon, and then with the combined average being the gray line in the middle. So you can see that we really did have quite the spike in spring of 2022. And the mortgage rates have really been, of course, affecting that demand. And so we've seen those rates go up. As those have gone up, the quantity of homes selling has gone down. And that is, I was just like, I just had a flashback. I'm like, did I just post a slide from, a year ago or something? Because we haven't seen that median price of homes in Ada County drop below $500,000 in a while.
Oh, wow.
And there it is right there. So that's been a push down. Days on market, 97% higher year over year. And inventory, 165% higher year over year. And the median sales price is only down almost 10% year over year. But let's go back to, this is what prices have done. So fine, the median home price is only down 10% year over year. But if you're comparing it to that peak, that's a bigger decrease. So it almost makes the number, made me double take the numbers, and I put the slides together and read them while I was doing it. So we had a 602,000 median price a while ago. Canyon County is now dropping to under 400,000. And we've had, a whopping 97% increase in days on market and a 110-ish% increase in inventory. So big data here. Question from Bodie.
The average or the median sales price for Ada County, wasn't that 542 in December? And now I'm seeing it's 487.
Probably.
Okay.
Yeah, probably something around there. I mean, we were like, the magic number in my head was almost
It was that
550. It wasn't quite there yet. Yeah. Mm-hmm.
that short wall that you talked about.
Mm-hmm.
It's
Mhm.
reflected in that number.
Yeah, absolutely. But what about duplexes and fourplexes? And then we will move on to the actual rental market, some rental market more trends that we've heard from First Rate. Inventory in duplexes and fourplexes in Ada and Canyon jumped. So it did double. And so hopefully more of those sales will be hitting the market. Pendings was constant at 9, and sales dropped from 15 to 9, but with only, that follows that other data. So the absorption level on duplexes and fourplexes is still low. There's still not a ton of inventory in those categories. And that 1.6 month supply is still, that's more of a seller's market supply, although it's not acting like a seller's market. But there's not a ton there. And then with Tony Dross's fourplex data, there was only one fourplex that sold in January, and it was going to skew the data so much that I just posted what it was. This is literally 4 townhomes. And so in terms of average price and everything, it's just going to blow up the data. So there it was, $2.3 million fourplex, but it's really 4 townhomes. So this data is not reflecting that. So this is a little bit older, but we had seen a 6-month trailing cap rate of 4.5%, and days on market had climbed up a little bit with the price per unit being somewhere in the mid 2s. We'll see what happens when we get some new data besides that one fourplex. Gross net rent multiplier was around 180. And that's the one where you can take that number and multiply your rents times that number and get a quick value, just for if you needed a napkin number, that's what we might do. And then in that 4+ market, here's where we've actually seen a few things come online, and, I just told you about a few of them. And then here we have, we show a few that are active now. That Colorado property doesn't look too bad, with the number of units, 16 units for 3 million. We saw one in Boise that was 7 units for, well, whatever. Anyway, that's what we have there. So market indicators. Dave Rusk from Idaho Central Credit Union is one of the lenders I like to use for single family stuff, duplexes 1 to 4 units. And Idaho Central works all of Idaho, sorry. Anyway, they said their rate locks were 3 times what they were than they were during the lull. Don't know why that was so hard to say. Rate locks up 3, they're 3, whatever, can't talk. So maybe 5 rate locks in October compared to, say, maybe 15 in late December, January, and now. So maybe that's an indicator that more people are getting ready to buy. We've had other signs that say we might get a spring market. My phone's ringing. It stopped ringing for a minute. But then we've got that Pioneer Title Index thing that shows numbers that were, 400, 500, 300, and now that's 162. So the market's been a little clunky, and it's hard to see which way it's really going. But the rental market has been stable. Also, kind of had a aggressive inclines in what we've been seeing happening with rents, and that sort of chilled out last fall as expected. And I don't think we're going to push it like we were, that rent isn't going to go up as high. We've had some rents come down a little bit in the NARPM data. First rate's still waiting to see what happens if the spring's going to warm up. They feel like it's the calm before the storm. And we just don't know what the storm's going to look like. Like for several years, it was absolutely frenetic. And it just seems like there's just not as much just driving, rocketing force as we've seen. So I guess we'll all have to stay tuned. They were predicting that they'll have more action in March. And a lot of owners aren't allowing vacancies this time of year either. They're not having their leases expire. So it's also a reason you might not have a really firm look at it yet. But here's the historical vacancies. We saw that they bumped up in they bumped up and then kind of leveled out. And that was all, this is Q4 2022. So we'll see where it goes from here. They do have the seasonal ebbs and flows. And for those who are asking always about rent prices, this is a super breakdown. Ada County at the top, Canyon County at the bottom, multifamily on top, single family below that, by bedroom count. And so here we have Ada County 1 bedrooms at around 1,134 a month, but that's a little bit lower than we had in the last Q3 2022 NARPM update. And I know you wanted that 1 bedroom data, so this slide was for you, Tom.
I do it. Does that include, a lot of properties have a lot of amenities.
Right.
And some have, like mine, Wi-Fi. So I'm looking at 1134, and that's an apartment with all kinds of amenities.
Yeah, it's a full-on average. That's the average price of your high amenity stuff and your 300 square foot 1 bedroom, if that exists. It's an average of all of it. But the thing that's really interesting is, so from 2 to 4 bedrooms, that rent was down $100 a month from last year and $200 a month from last quarter. And so the 2 to 4 bedrooms are ranging in Ada anywhere from $1,650 to $2,500 basically. And the average vacancy rate that they've been seeing is just about 3.5%. In Canyon County, those 2 to 4 bedrooms were a little tiny bit higher at 1,667 to 2,495. And that could be indicative of the Canyon County sample size being newer units or something like that. But this was like 25 property management companies who manage 9,000 units. That's what this data is a compilation of. Okay, well, that concludes the rental market update, and we'll start moving toward the feature presentation. But before I do, does anybody have any questions? Any predictions? Anyone want to make any bold predictions on what you see happening in spring?
Rent's coming down.
Rent's coming down?
Down,
Home
everything
for the
across the
store.
board.
Okay,
Depends on the location and the property.
well, absolutely. And the downtown and by BSU in these areas that are really strong performers, they tend to do well no matter what's going on in the market. Where we saw some shifts in fall, this wasn't a rent shift, but it would have been, or it probably was, is, you know, way out in the outskirts of the sprawl. It wasn't, the home wasn't brand new anymore, and they were competing with brand new homes. And so, yeah, it just really depends on your location and where you're at. I agree.